Hello everyone, how are you? I hope you're all doing well. Today we are going to learn about the step-by-step guide to calculating corporate tax. Let's get started. In here I have written 5 steps to calculating corporate tax. You have to know about this. If you have company, you have to understand how many tax that you have to pay government. If you don't pay this tax, so you will get problem in the next time, and you have to pay it more. So you have to care about this. Calculating corporate tax can seem complex. So many components inside of it, but it follows a clear step-by-step process. By identifying revenue, deducting allowable expenses, making fiscal adjustment, and applying the corporate tax rate, businesses can determine their tax obligation accurately. This guide simplifies the calculation into 5 easy steps so companies can better understand and manage their tax responsibilities. You can see in here there are 5 steps you have to understand to calculating corporate tax. Number 1. Calculate tax company's revenue. Number 2. Subtract tax deductible expenses. Number 3. Adjust for any fiscal adjustments. Number 4. Subtract any loss compensation. Number 5. Calculate the tax due. Okay, I will give you the example starting from number 1. Calculate revenue. For example, you have company and you get revenue in 1 year. The total revenue, for example, $500,000. This is the total revenue of your company in 1 year. Okay, next. Subtract tax deductible expenses. Okay, tax deductible expenses, it means the cost can be decreased from tax. It means you have many expenses, so these expenses can decrease the total of tax. Okay, I will give you example. It means for subtract tax deductible expenses. Your company have to pay money to your employees, and if your building still rental, you have to pay it. And you have to pay operational costs. For example, electric, water, lighting, air conditioner, and extra. All of this can decrease of the total tax. Okay. For example, you have to pay salaries to your employee $150,000, and if you still rental building, for example, the cost is $30,000, and for operational costs, for example, $70,000. And if you total all of this, $250,000. And so the profit of your company, you can decrease $500,000 minus $250,000, and you will get profit $250,000, your profit. So this value, it means the profit before tax. Next, go to number 3, adjust for any fiscal adjustment. Fiscal adjustment is the process of reconciling commercial accounting profit with taxable income according to tax regulation. In practice, companies prepare their financial statements based on accounting standards, but not all expenses or revenues recorded in accounting are acceptable for tax purposes. Therefore, adjustments are needed to align accounting profit with tax rules. I will give you example for fiscal adjustments. For example, for entertain, and the total entertain is $10,000. So on the fiscal profit, you add $250,000, add $10,000, and total $260,000. Okay. Next, go to number 4, subtract any loss compensation. Subtract loss compensation means reducing taxable income in the current year by using previous year's tax losses. Many tax systems, including Indonesia, allow companies that experienced a loss in 1 year to carry forward that loss and use it to offset profits in the following years. This helps reducing the tax burden because companies don't have to pay full taxes right after recovering from losses. I will give you example. Right now, 2025, you get profit 250 or right now $260,000, and previous years in 2024 you didn't get benefit or you didn't get profit, even you lost $20,000. So taxable income is previous in 2024 you lost $20,000. So right now taxable income or PKP is $260,000 minus $20,000, and it becomes $240,000. It is a taxable income. And the last one, calculate the tax due. Tax payable 22% times this $240,000. $240,000, and the value becomes $52,800. Okay, and this is the total your company have to pay tax. Where is you get percent 22%? The 22% comes from the corporate income tax or CIT rate in Indonesia. In Indonesia, the standard corporate tax rate is 22% for the fiscal years 2022 onward, based on law number 2 of 2020 and its updates. It was previously 25%, but the government lowered it to 22% to support business recovery and competitiveness. There was also a plan to reduce it further to 20%, but that hasn't been implemented yet. So when I used 22% in the example, it was based on the current standard rate for corporate taxpayers in Indonesia. I think enough for this example to make you understanding how to calculate corporate tax, and you can see 5 steps in here. If you have any question about this, you can comment on below this video. Thank you so much for watching this video. Don't forget to subscribe, like, share this video to your friends. See you next time and goodbye.